I want to quickly talk to you about Can Capital. And Can Capital can really help you when it comes to business funding. But the big question is this business lender really worth it this year? And how much can you potentially actually borrow from them? Okay. So this is all that I'll be talking to you into this conversation about. Okay. Now, let me first define for you what this institution is really about. So what is Can Capital? So if you think about Can Capital, I want you to think about one of the OGs in the space of business funding. Why? Because they've been at this game for more than 25 years. 20 more than 25 years. And so when it comes to business lending, 25 years, a quarter of a century is really really good when it comes to let's say establishing a proven track record, okay? So Con Capital is one of the longest running companies in the alternative lending industry. So it's basically a company that's is considered an alternative lender. So it's not a bank, it's not a credit union, it's not really an online lender. Also, they actually specialize in things like short-term loans, merchant cash advances, equipment financing, and so on and so forth. It was actually Ken Capital was actually one of the first companies to offer MCA's merchant cash advances when the company launched in 1998. Okay, so that tells you a lot about the proven track record I was actually talking about a little earlier. Okay, so the company has grown and evolved in the last 20, 25 to 30 years since it actually launched under the Advanced Me brand. So back in the days, they used to be called Advanced Me. Okay, so in 2013, let's say 15 years after the company was founded, they rebranded as Can Capital. So what they do, what they're doing here, and then what they're doing now is that they're actually funding a whole variety of business sectors. Okay, the company is based actually in New York, but it started in Georgia. So when they actually started the company, they were based in Georgia, let's say in Atlanta, but nowadays they are actually in New York City because I mean they have a larger portfolio and they also wanted to get closer to let's say larger and more active metropolises in terms of the economy. So if you think about Can Capital, what kind of business loans can you actually get through this lender? So, like I said to you a little earlier, you have short-term loans, merchant cash advances, and equipment financing arrangements. Let's say predominantly. Of course, Ken Capital can arrange for you other types of businesses. Okay, but basically they are focused on those three for now. So when you think about short-term loans, for instance, you're able to get anywhere from $2,500 to a quarter of a million. Okay, so $250,000 maximum, and you have a repayment window, basically anywhere from 6 to 24 months. Okay, 6 to 24 months. So that's really good from a flexibility point of view. Okay, but it could be a little complicated too if you're not generating, let's say, enough cash flow to really support or to really cover those monthly payments. So the amount that you ultimately qualify for depends on your annual revenue. Okay, so Ken Capital can give you a maximum of $250,000 if you are generating enough capital to actually cover that. So term loans carry an origination fee of up to 3% of the loan amount. You can set up daily or automatic weekly payments. Okay, you can use the funds as working capital to solve, let's say, cash flow issues, grow your business, invest in marketing, purchase inventory, and more. So, Ken Capital is not comfortable doing the monthly repayment thing. They want to do daily or weekly repayment. Okay, so that's for short-term loans. They also have a MCA, Merchant Cash Advance. Okay, so the company's MCA program is very similar to the term loan, with the same borrowing amounts. Instead of an origination fee, you will pay a $595 administrative fee. Okay, so basically, what happens here is that repayment comes from a percentage of future sales. Actually, okay, so there are actually no limits, no set limits like there are with term loans. Your daily payments fluctuates with your sale, and the term goes on as long as it takes to repay the borrowed amount from your daily revenue. And for equipment financing, you're looking at $5,000 to $250,000 loan amounts, and the repayment window goes from 24 months all the way to 72 months. So 2 years all the way to 6 years. So what are the qualifications for Can Capital? If you try to get a business loan from Can Capital, what are the qualifications? Well, the thing is, in terms of credit score, Can Capital can accept anywhere from 500 all the way to 850. So the lowest they can accept is 500. If you have a 500 FICO score, that's not a problem. Now, for the MCA program for merchant cash advances, there is no credit score requirement because this is revenue based financing. This is based on your sales. So your credit score really doesn't matter. Okay. In terms of time in business, Can Capital wants you to be in business for at least 2 to 3 years. So you can see that if you are a startup, you're not going to qualify for a business loan through Can Capital. Okay. So maybe look for another lender. In terms of revenue, basically, Can Capital wants you to make at least 150 to $175,000 in annual revenue. So that's about what? About I would say anywhere from 10 to $15,000 a month. Okay, so loan amounts usually go up to 70% of your annual revenue, but the exact amount depends on your application too. You also have a debt, so you have to take care of. You have to really pay attention to your debt and bankruptcy situation too. Okay, so Can Capital will only work with a business with less than $175,000 in tax liens or judgments, and the company will also work with business owners who actually have a personal or business bankruptcy on their credit history on their credit history. So as long as it was discharged at least 12 months prior to applying. So if you have a bankruptcy situation, just make sure it has been discharged at least 1 year before applying. And also, you got to have a business bank account, okay, to actually apply with Can Capital because they will review your bank statements to identify your business's revenue and cash flow when determining actually eligibility. So, how do you apply to Can Capital? So, the application process is pretty straightforward. Nothing really complicated here, okay? So, you got to go online, go to cancapital.com. And so, the company has a one-page application, one-page online application. So, that's really good. Nothing, it's pretty straightforward. It's also a streamlined application. So, you got to provide basic information about the business and provide also business bank statements from the previous 3 months. So they want to look at your bank statements for the last 3 months. Sometimes they will ask for 6 months. It really depends on how much you want to borrow. So the more you're asking Can Capital to approve you for, the more documentation you might be required to actually submit. So basically, you go through the process. So there is a soft pull process. So basically, you can pre-qualify. Okay, you can pre-qualify. So Can Capital will see if you pre-qualify without even touching your FICO score. So this is actually a soft pull. So basically, once they determine that you pre-qualify, they're not going to send you offers. No. What they do is they will put you in contact with a Can Capital rep. So they will make sure that you speak to someone at the company, and then the company sends you a loan offer or offers, okay, based on your conversation with that loan rep. So that's one of those things where you want to really take the time to review all the loan offers. You want to look at the terms, the fees, the interest rates. You want to look at everything, okay? And so once you make a decision, once you accept an offer, Can Capital will complete the underwriting process. Okay, so they'll probably go over everything once again and probably make a decision and a funding sort of and follow a funding protocol within 2 to 4 days. So the whole thing can be actually wrapped up in 2 to 4 days. That's pretty good. That's really really good. So when you think about Can Capital, what are the advantages and the disadvantages of borrowing from this lender this year? So one thing the first thing that comes to mind when I think about Can Capital is the fact that you have a quick and very easy application process. Okay, so you have also a lower borrower qualifications than many other lenders. Like if you were to compare and contrast what Can Capital is asking you versus what SmartBiz is asking you, or Blue Vine, or Lendio, or Clarify Capital, Can Capital is really on the lower side. Okay, so you are able to work with Can Capital even if you have bad credit. If you have poor credit, not a problem. Okay, so that's really good. And also, like I just said, Can Capital is willing to work with you if you have bankruptcy on your file. But that bankruptcy discharge has to be at least 12 months old. Okay, so that's kind of cool. And another advantage of Can Capital is that basically the company has a great customer service. They have great loan reps that they can really put you in contact with, and also the turnaround time on funding is pretty fast too. So you can get, as like I said, you can get your funds in 2 to 4 days after applying. So that's kind of cool. Okay. So what are the disadvantages of Can Capital? First of all, the maximum loan amount is $250,000. So if you need a larger amount, you're not going to really you can't find it through Can Capital. Okay. Also, one thing I want to say is that Can Capital's underwriting process is also different than other alternative lenders. So there is more of a focus on underwriting at the later stages of the application process. Okay. And this could actually lead to a higher denial rate on applications. So you could be denied. That's what I mean. Okay. And also the impact of the frequency of loan repayments on your cash flow can also be a little problematic because they're asking you to have daily or weekly payment schedules. Okay, so that's really something to really think about. Okay, on top of that, Can Capital does not report to major credit bureaus, so you cannot expect to build credit with your business term loan, your equipment financing arrangement, or your MCA that you got through Can Capital. Let me pursue this a little bit more by saying that, let's quickly talk about the pros and cons of Can Capital so we have a clear idea what this lender really stands for. What I love is that Can Capital has been around for over 25 years. I mean, that's really huge. When you have over 25 years of experience and you are an established name in alternative lending, that's really big. That proven track record is that track record should really count for something. Okay, and also there is a discount for prepayment of short-term loans. So I love that a lot because that means you're saving money. Okay, and also if you have low credit score requirements, you have fast funding potentially available in 24 to 72 to 96 hours. You have a friendly and knowledgeable customer service. That's really good. And also this lender will work with you if you have been in bankruptcy before, you have a large amount of debt, or even if you have poor credit. On the flip side, if you think about Can Capital, just keep in mind that this lender can be more expensive than long-term and traditional loans. I mean, traditional loan providers, such as banks, such as credit unions, such as even online lenders. Okay, I mean, they're giving you cash, quote unquote, easily, but they're charging you to a lot, okay? And also, you can't expect to build credit with Ken Capital. They're not going to report your data to Dun and Bradstreet, to Experian Business, to Equifax Business. No, they don't report anything. So this could be a little problematic for some business owners. Okay, and the origination fee that they charge can be a big no-no too. I mean, charging you an origination fee or administration fee of 3%, that's a lot. I mean, you can say, well, some companies charge 10%. They're charging only 3%, but they're charging 3% on a larger loan amount. I mean, $250,000, that's the maximum. So if somebody charges you 3% of $250,000, that's what? That's $7,500. That's a lot of cash right there. A lot of cash. So basically, this could be a little problematic too. But yeah, it is what it is. So overall, if you think about Ken Capital, I want you to think about a direct lender. So this is a direct lender. This is a legit company. They've been around for more than 25 years. So this is legit. You can't get more legit than that. Okay, a company that's been around for more than a quarter of a century has to be legit. Okay, and they have financed close to $10 billion in business loans in the past 25 years. So that's really cool. And again, I just want to reiterate the fact that they focus primarily on three types of business funding programs: short-term loans, merchant cash advances, but also equipment financing. Okay, so those are the three. If you're looking for a business line of credit, for instance, Can Capital is not going to help you. If you are looking for a business line, sorry about that, a business line of credit, maybe a Blue Vine can help you out. Okay, so just be aware of what you want. If you're looking for, let's say, invoice factoring or accounts receivable financing, Ken Capital cannot really help you out. Okay, so the one thing I want to say here is that if for any reason Ken Capital denies you, you have the options of reaching out to other folks, to other lenders, for instance, to see if you can really qualify. Okay, there are actually literally thousands of alternative lenders out there. So if you have any question, if you need more clarification on this topic, please let me know in the comment section, and I'll certainly get back to you. I'll certainly explain to you what kind of lender to reach out to, what kind of situation you can really use to your advantage. Okay, to make sure you get funded, to make sure that your business gets funded. Okay, and at the end of the day, basically, if you are choosing Can Capital over another lender, this could be because you are looking for a lender who works with folks who have been in bankruptcy before, folks who have bad credit, or folks who just want to be funded faster, because Can Capital offers that advantage of funding you real fast. Okay, like I said, relatively fast, because 2 to 4 days, that's really fast for a business loan program that goes all the way to $250,000. Okay. Only thing is, just be aware that they'll charge you big time too, in terms of the interest rates, but also the fees. Okay, something to be aware of. So, in conclusion to this conversation, I spoke to you about Can Capital. I explained to you what Can Capital really is, what types of business loans are available with this lender. So, three types primarily. You have short-term loans, merchant cash advances, and equipment financing. What are the qualifications for this lender? How to apply? What are the pros and cons? And now, thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.